Hello amazing forex trader, welcome once again to my screen. Today I'm going to be analyzing GBP USD. So on GBP USD we are having a very nice setup, and I'm going to be breaking it down as easy as I can, and let's analyze this together. Now if you're new into this channel and this is just your first time, please make sure you click on that subscribe button and the notification button so that anytime I upload a video on my channel, you'll be among the first to be notified. So let's go to the chart. Now looking at it here from the weekly time frame, you could realize that I'm expecting a sell on this pair on GAUUSD, but I'm a kind of trader that I don't like analyzing in one point, you understand, though there are likely points that this market may likely buy to the upside. But the main reason why I'm putting all my attention to sell this pair is because I'm a kind of correlated kind of trader. Like before I trade the forex pair, I like correlating it with the DXY. Now the DXY has gained a lot of volume, it has gained energy, like it has gained momentum to the upside. So that is the main reason why the pound, the euro, and the rest of the forex pair may likely dump to the downside. The USD pairs may likely dump to the downside. So looking at it here, let's break it down from the monthly time frame. So make sure you grab anything that you want to grab, and let's go. So on the monthly time frame, we're going to be looking for the directional buyers on this pair. So how do we look for the directional buyers? Now looking at it, normally looking at structure, starting from this weekly time frame here. So where is this my part 2? Starting from this point here, you realize the market has been bearish, creating series of higher and lower high, lower low, lower high, lower low, lower high, lower low, came here, created a lower high, equal bottom, equal low, equal top, came here, created a lower low, now came here, created a low, like created a higher low, then this market here is supposed to create the lower low to this point here. As you all can see, the market is supposed to create a lower low, but this point here held it, this key level held it, pushing it back up. Now market came to this point here and be creating series of, market has just been ranging within this point here. It has been ranging very, if you check it very well, it has been ranging. So at this point here, it created this point here, equal top, or you can see it is a head and shoulder for those people that knows chart pattern a lot. Then what do you see? Market may likely break from this point. So I'm expecting this market to break. So looking at it like this now, the market has not taken out this high and the market has not taken out this low. So this is TE lower high. This is TA lower high. So market may likely dump to this downside. So according to this price action I'm seeing on this pair, I could tell you that the market may likely break out from this key level. After breaking from this key level, break out from this trend line, breaking out from this trend line, and once it breaks it, I'll be expecting nothing less than a pullback, then a continuation to this point here. So that is my analysis and my thought process towards this. So if you ask me what does the monthly time frame, what's the monthly time frame doing currently, I will tell you that the monthly time frame is ranging. The monthly time frame has been ranging. So we are going to be waiting for this key level and this trend line to be broken. Once it can break, this chart pattern will be active and it will be activated, and we'll be expecting market to rally to this point here, or first point here to this point here, because this is the immediate support level there of the monthly time frame. So that may likely be what may likely hold this market first before dumping. But as you all know me, I always like breaking down things as we go further lower. So let's go to the weekly time frame to check for any chart patterns that may likely stop this thing from going down, or that may likely stop down, may likely cause the push to the downside. So back to the weekly time frame, you all can see that the weekly time frame created this very nice double top or head and shoulder. This is the left shoulder. Let me use my path tool so you all can see it clearer, very clearly, or very clearer. So from here like this, the market created this left shoulder, you understand, came here, created the head, pull back down, created the neckline, came here, created right shoulder. Now currently pulling back to the downside. Now not just that, the main analogy towards this, if you check very well, you realize that when market was coming to this resistance point, market came here, created this resistance point. This idea was higher than this one. This one was more lower than this one, showing weak rejection, showing that market is no longer interested in going to the high side. So when the market pushed down to this downside, we're expecting a pull to the downside. So market eventually broke out from this key level. Alright, so as I was saying, looking at it from this side here, we realize that here was higher. Now my market pulled to this point here. This point is supposed to create a what they call higher high, but the market came to this point here and created a weak rejection. So this point here was higher than this. So it's showing exhaustion. So because of the exhaustion, that's what made the market to rally down to the downside here. So the market eventually broke out from this support zone, turning it into resistance. So when market broke it, it retested back to the resistance and created a double bottom. But because of this double bottom, the market could not rally down to the downside. So that's what caused this push to the upside. Now when market tried to break out from the range to the upside, it couldn't, leaving a weak rejection, this pin bar at this middle here. Now looking at it very well, you will realize that because of this pin bar here, that's what caused the market to rally to the downside. Now the market also created a double bottom here. If you go to the daily time frame, you see that this double bottom is more clear, and you could see also that this double bottom is more clear. Now because of this double bottom, the market went to the upside. Now this point here is supposed to make this market to break out from this, but if you check very well, you could see that this point here did not even go up. This point is more higher than this. That's to show you that the market is currently exhausted. It does not want to continue to the upside, continue running to the upside. So at this moment now, let's judge this by the candlestick. When you see that when the market was trying to go to the upside, it started creating this series of very unhygienic. The candle was looking not healthy. The candle was not healthy at all, trying to tell you that the market is losing its momentum to the upside. The market is not interested to the upside. Now let me give you a clue. Anytime you see when market is creating series of higher highs, higher lows, higher highs, higher lows, then when market is supposed to create a higher high, the market did not create a high. Rather, the previous high was the candle that want to create a high is lower than the previous high, just so that the market has started losing its momentum to the upside. So that's something that caused this, that made this thing to happen. Now looking at it here, this is the neckline of this head and shoulder, or you can call it triple top. Now looking at it now, judging it from this point here, you can realize that market is reacting on this trend line. So judging from this point here, you can see that the market is reacting at the neckline of this point, not just at the neckline of that point there. You can see that the market reacted severally on this trend line, and this trend line is not just a 1 hour trend line. No, a 4-hour trend line. It is a whole weekly, or you can call it a monthly trend line. Market tested 1 and 2, currently testing for the 3rd time at this point. So now there are likely 2 things that may likely happen to this market, because you all know that I don't like analyzing in just one direction, but I like choosing out of the 2 scenarios which one I am more interested on or interested in. Now looking at it like this, now the main reason why I'm more concerned about this third touch, because the market, the third touch always does the trick. Like the third touch can bounce this to the upside. That is my concern. So, and not just that, if you use the Fibonacci level from this swing low to the swing high, to the present swing high, you could see that the market intersects at that third touch of the trend line. So this thing now can be this thing can be 50-50, a whole 50-50 scenario. A whole 50-50 scenario. The market can bounce to the upside, but because of this normal price action you are seeing here, that's why I say the market is 50-50. If the market did not create series of something like this, I would have said I'm expecting this to rally to the upside. But because of this I explained here, that's what I'm saying. The market is currently 50-50 at the moment. So we'll be likely expecting 2 things to happen on this point here. One is for the market to rally to the downside, while the other one is for the market to rally to the upside. So that's what I'm predicting for this market at the moment. So, but looking at it, first of all, if you go to DXY, now let's go to DXY. Let's see what DXY is doing. So we are in the DXY chart, weekly time frame. Now looking at it from and on currently at this DXY, the weekly time frame, you can see that the DXY also created something like that on the on that. It want to look like the GU here, but the inverse way. Now looking at it here, this is the head and this is left shoulder, this is the right shoulder, this is the neckline. Market has created this impulse candle, though was reacting because of this resistance point here. Market reacted because of it. If you check it very well, market reacted because of it there. So this point has not clearly cleared this. It has not clearly cleared this key level. So in order for us to take that GU sell, in order for that head and shoulder on that GU to be more valid, DXY need to create additional candle, at least a daily candle up to the upside like this. If you can see another candle like this, come in place. If you can see another candle like this on DXY, should break out like this from DXY, another candle, they will be expecting GU to rally to the downside. So like this now, if DXY could break more, create an additional daily candle or a weekly candle, anyone, then we'll be expecting GU to rally to the downside. So that is just it. DXY is gaining more momentum to the upside, while GU will be gaining more momentum to the downside. So that is just the analogy towards this. That's just the analogy or the psychology towards this analysis on GU sell. So let's go back to our GU sell, our GU pair. So back to the GU. Looking at it after everything that has been done, after all the analysis or after what I just explained on DXY, you could see that is our thought process currently on this pair. That's why I'm expecting 2 things or 2 scenarios on GU, currently on GU. Now, sorry to cut you, sorry for the break in transmission, or sorry for doing this, but if you check my previous analysis on gold and BTC, you could realize that they are currently playing out as exactly as I said. So it's just for you to know that yes, my strategy works, and you should not play with what they call the top-down analysis. You should not play with what they call the top-down analysis approach. It is an approach that you can apply into your strategy and you'll be making a lot of money out of it based on your understanding and your approach to the forex market. If you're an ICT trader, you are a CRT trader, you are a SFC trader, you are a upper strategist trader, no matter what, you can apply it to your what analysis. The main thing you just need to know where liquidity resides in the market. You just need to know where your point of interest is, your directional bias, and how to execute the trade. That is just it. Once you know the Google map, you are good to go. So back into this chart. Now on this weekly time frame, we could see that we are expecting two things that may likely happen. But like looking at it from here, I think the buy is more stronger than the sell. But if DXY can do what we want, we'll be expecting the sell to be more stronger than the buy. Exactly. So, but me, I'm expecting just one thing. I'm expecting just one thing, and that is what? The sell. And that is what? Just the sell. I'm expecting only just the sell. That's what is in my mind. But at the back of my mind, I also have that market may likely what? Buy. Market may likely what? Buy. But if market may likely buy, then DXY will rally to the downside. And if DXY rally to the downside, then I'll be catching the GU buy. Or I have another pair that is cooking at the moment for the buy. Then I'll be making a video within the week to explain why I'm interested in the buy and how to approach it to execute. Now I'm going to the daily time frame. So we are in the daily time frame looking at it. All right. So currently on the daily time frame, you could see that the market created this weak rejection when market came to this point here. This weak rejection, it came back to this point here and tapped it on this key level. So market may likely pull to the upside, maybe to this point here before rally to the downside. We don't know. Only what we just know is that the market is currently on a decision point. And this decision point contains a lot of liquidity depending on what the DXY may likely do that may likely affect this market at the moment. So since we have seen this, we can be expecting market first thing first. If the market should rally to the upside, then we have an internal trend line, in which the internal trend line is the first trend line that market may likely take first before going to the upside. Now looking at it, this is the first trend line that the market may likely take before going to the upside, while the external trend line will be this. The external trend line will be this. So if you don't know how to draw your trend line, make sure at the tip of your wick rejection, the wick, not the body, tip of your wick, 2 touches and more. 2 touches minimum, 2 touches maximum, more, unlimited. So this is it. So if the market should come to this point, if the market should buy, what I'll be expecting is a rally to the upside to this point, maybe a pullback creating a double bottom, then a break, a retest, a continuation to the outer trend line, because there's an analogy towards this. The market move from key level to key level, the same way market move from trend line, from an internal trend line to an external trend line. So if the market should break from this internal trend line, I'll be expecting the market to come to the external trend line, and if the market should comes to the external trend line, I'll be expecting a pullback, then a continuation to the upside. So that's my analogy towards the buy of this. But the analogy towards the sell of this will be like this. So will be like this. Since the market has created this weak rejection at this point here, showing that it is not interested to the downside, then it is not supposed to create an additional candle below it. It's not supposed to create an additional candle below it. But when it does create an additional candle below it, that is to tell you that the market has violated this trend line and also this key level, and the market is also interested to continue what? The market is also interested to continue what, as I said, also continue to pull back and continue to the downside. So that is just it, and that's how simple it is. So going to the daily time frame to figure out how are we going to be catching the sell if this should occur. Now we are in the 4-hour time frame. Looking at it from here, after all things being equal, you will see that at the moment, at this point here, on the key, on this key level and on this trend line, when the market came to this key level, it was the candle, this massive candle, the volume of this candle was more higher. When the market came, the volume was very high. Then when the market came to this key level, it started reducing. It was started reducing. Like if you check it very well, it started to consolidate. Like the candlestick started to reduce, the volume of the candlestick started to reduce. Then the market broke out. Then the bulls took over. Now this candle, this 4-hour candle, engulfed 1, 2, and 3. Engulfed 3 good candles. So this is to show that market may likely be interested to continue to the buy. We don't know, but as I said earlier, if the market should give me something like this, a further push to the upside, maybe to fill this imbalance here a little bit, you understand, then a rally to the downside. If the market should give me something, if the market should give us something like this, after doing everything it wants to do to manipulate everybody, if the market should wants to do like this, because you know the conflict between Iran and US, or Iran and Israel. So I think Donald Trump, or Trump himself, the president of US, I mean, I think they were in process of negotiation to get out Iran, but I don't know if the deal has come into fruition. I don't know, but if the deal comes into fruition, the US dollar is going to appreciate, while the pounds is going to depreciate. So if that should happen, we'll be expecting a pull to this point here, and at this point here we're going to be looking for a weak rejection, some series of weak rejections at this point, then a breakout from the range on a lower time frame, maybe the 15 minutes time frame, because the 15 minutes time frame I like entry. Then I'm waiting for a breakout from the box of the 15 minutes time frame. So on the 15 minutes time frame, I'm going to be, so this, take this, make sure you pen it on paper. Now looking at it here on the 15 minutes time frame, I'm going to be boxing this out, boxing it very well. Then after boxing it, I'll be waiting for the breakout. So once I see the breakout, I'll still be expecting a pullback to this on the 15-minute time frame. Once I see a pullback and I should see an engulfing candle, I'll be executing on that engulfing, bearish engulfing candle, or I will be entering aggressively at the breakout. I will be entering here, or you can enter here, or you can enter at the bearish engulfing candle. Anywhere you want to enter, but the main thing here is that stop loss. You can put your stop loss on at this point here, or you can put your stop loss at this point here. But I love putting my stop loss here because that is where it is. Then you can swing trade this to the downside to this point here. So this is going to be a 1 to 13 risk to reward. This is going to be a 1 to 13 to this is going to be a 1 to 13 risk to reward, rough estimation. But if you're not a swing trader like me, slash intraday trader, then if you want to just day trade, then you can just catch your 1 to 2 risk to reward, or 1 to 3 risk to reward, or 1 to 4 risk to reward, and let it play out. Let him play out. Once it plays out and hits your take profit, then you can close for the day, or you can take your stop loss and carry it to break even, take partials and keep holding. So that is it to this pair. And that's the opportunity I'm seeing to this pair. But if GU does not do this and it ended up creating series of massive candle to the upside, then I'll be expecting this selling opportunity will be violated. I'll no longer be looking for selling opportunities. I'll be looking for buying opportunities to this pair. So that is what I'm looking for on GUUSD. So let's go to gold. Let's see how gold analysis on last week pair has gone so far and how we are going to be executing to add more positions to it. So welcome back to my screen on this gold pair. So on gold pair last week I analyzed that market is going to dump from this point here, down to this point here at least. So as you can see, we are currently at this point of the market. The market pulled back to this point here. So like this, for you to see that the market has reached, this was my first take profit on this pair actually, but actually because if I'm to execute at this point and my first take profit will be here, the risk to reward will not make sense because my stop loss was at this point. Though my stop loss is supposed to be at this point, but because I know one thing with gold is that once it has given you your entry model, it may likely start rallying to the downside. You see gold, all these risk assets just like gold, Bitcoin, US oil and so forth and so forth, you understand, S&P 500, UK 100 and US 30, they will start rallying to the downside or upside. They hardly have pullbacks, a steeper pullback, except when they create a chart pattern or thereabout or some series of consolidation. Now looking at it here, if you check very well, the next target is this point. So we may likely be expecting market to pull to this this level of concern here, which is a round number, is a psychological number. Market may likely pull to it, or the market may likely drop. As anything the market wants to do, we will likely catch the trade. So how are we going to be taking advantage of this? If the market should clear this point, so let's see what we can do. If the market should clear this point, let me clone this. If the market should clear this point with a bearish engulfing candle, a 4-hour bearish engulfing candle at this point like this, so we'll be executing, we'll be waiting for a pullback. Short position will be at this point. We'll just be catching a 1 to 2 risk to reward as usual. Our stop loss is going to be here, our take profit is going to be there, then our stop loss is going to be at this point. So we are going to be catching a 1 to, okay, if you want you can also make it tiny like this, a 1 to 2 risk to reward. Then we are going to be expecting market to pull to this downside. Market should pull. We just want a week, just a caption of a week to this point, then a rally to the downside. So that's what we're going to be expecting on this pair here when market opens this week, because today is Sunday and today's date I think is supposed to be 21 or 20. Okay, yes, 21 looking at it. So that is it to gold currently at the moment. So let's see if Fibonacci can be in play. Let's know where Fibonacci may likely cause this market to pull back to before rallying down, if it's this one or this point here. So from this point here we are going to be dragging our Fibonacci. So market may likely go further to the upside before coming to the downside. But if market should go to the upside before coming to the downside, I won't be taking this trade. Rather, I'll be expecting market to come to this side, or market should drop immediately and close below. Once you can do that, then I'll be catching the trade to the downside. So that's what I'm looking at for it. But if it's left to you, based on your entry model, you can look for a suitable entry model like a sniper entry model and be taking your trade down to the side. I won't be trading it once it validates this. So that is it to this pair, and that is all what I'm looking at. So Bitcoin. Let's check for Bitcoin. Let's see what Bitcoin is doing. Looking at Bitcoin, in my last video, I anticipated that market should come to this point here and rally to the downside. Now that is exactly what market did, but it didn't come to my main take profit, so I didn't take the trade. Though I took the first trade, but I didn't take the last trade because the market came to my external trend line, and that's why I closed my take profit. This was my outer trend line. I was anticipating market to I was anticipating market to push to the lowest, to the downside more, because I was waiting for a series of break retest continuation, a series of break retest continuation patterns. So when I execute at this point here, I was targeting to this point here, because you all know market move from internal trend line to external trend line, and from key level to key level. So with that analogy, that's what I used to catch this trade to this point here. Then I closed my first take profit at this point here. Now I was anticipating market to pull to this side, in which it did. Then I was anticipating market to take out this low. Now on my telegram channel, I was anticipating. I told all my subscribers that they should wait for the market to take out this low. If the market should take out this low, a 4-hour candle closure below here, a bearish 4-hour candle closure below here, then our anticipation is to catch the trade down to this point here. As you can see, market came to this point, reacted at this point here, then rallied to the upside. So like this, now we are out of this pair. We are anticipating markets to rally to the upside more, to go to the upside more before we may likely this trade. A market should to the upside, at least pull back maybe from here, or maybe go to the upside. Anyone wants to, but we'll be catching it, then pull back here, then additional pop, there may be reactions, then a break will be catching the sell to the downside. But if it does not do anything like that, then we are off the pair at the moment. So but my anticipation is for it to come to touch the third touch of this trend line at the moment. So if it can come and touch the third touch of this trend line, this outer trend line, or can I call it inner trend line, because there's still an outer trend line on the weekly time frame. If the market can come to this point, or come to this point here, come here, then it pull to this upside here, there may be some reaction, then a break of the trend line, then a continuation. I'll be catching it. But like this, now I'm out of this pair and I'm not interested on it. I'll just be watching it from afar. If I can see my entry model in it, I'll be taking it. So this is just an update to my previous videos. So please, if you have not subscribed, once again, please make sure you subscribe and like the channel. You can also share it to your friends, share it to anybody that is finding it how to analyze, and go to the description channel, go to the description part below. You'll see the URL to my telegram channel. If you are not in that telegram channel, I tell you are missing a lot. So make sure you subscribe, like, and share. Have a nice day. I wish you all success in this coming week or in this week. Have a nice day.